Hello everyone, I am Priyanka Vish from DPS Namachor. Today in this session, we will be continuing with the same question discussed in the previous session. But here, we have to prepare the machinery account in second method. Second method is when provision for depreciation account is maintained. So as we know, when provision for depreciation account is to be maintained, we prepare two accounts. First is provision for depreciation account, second will be machinery account. But here in the asset disposal account, we have to prepare one new account which will be called machinery disposal account. The provision for depreciation account is prepared to record the depreciation amount charged on the machinery. Now, as we know, the first machinery was purchased on 1st April 2010 for Rs 8 lakh. So here we will be providing the depreciation of first machinery at the end of the year. End of the year will be 2011 31st March. Depreciation will be recorded as by depreciation account. So the amount of machinery purchased was for 8 lakh. And the rate of depreciation is 10%. 10% of 8 lakh will be 80,000. So to balance debit and credit side, we will record the same amount on debit side. And this will be called balance carried forward. It's a closing figure. Closing figure is recorded at the end of the year. End of the year is same, 31st March 2011. Now this closing figure becomes the opening balance in the next year. Next year will be, beginning of next year is 2011 1st April. Closing balance when it becomes opening balance, we write it as by balance brought down. Amount is 80,000. Now again at the end of the second year, we'll charge the depreciation on first machinery. 2012 will be the year ending for second year, 31st March. As it is the original cost method, so we'll charge the depreciation of original price of the machinery by depreciation account, and the amount will be same, 10% of 8 lakh, which is 80,000. Total of credit side is 1,60,000. To balance debit and credit side, we'll record the same amount on debit side. As it is a closing figure is written as to balance carried down. Amount will be 1,60,000. Closing figure is always recorded at the end of the year. Now again this balance becomes the opening balance in the next year. The beginning of the next year will be 2012 1st April, and we write the opening balance as by balance brought down. Amount is 1,60,000. Now in the year 2030 on 1st January, which comes in between the accounting year 1st April 2012 to 31st March 2013. The part of the first machinery was sold for 44,000. The part of the machinery was for 1 lakh rupees. We have already calculated the amount of depreciation of this part in the machinery account under first method, where provision for depreciation account was not to be maintained. So we will charge the depreciation on that part of machinery for the time period of 9 months. Why? Because the part of machinery before selling has been used for the period of 9 months, from 1st April to 1st January. we will write it as by depreciation account, and the amount of depreciation was 7,500. Now at the end of the year, which is 31st March, depreciation will be charged for the remaining 2 machinery. We have already calculated this amount in the previous method, and the amount was 73,000. This amount includes the depreciation charge on the remaining 2 machinery. 7 lakh of first machinery and 1,20,000 of second machinery. Now, this is the amount of depreciation charge on the part of machinery for the current year before selling. The accumulated depreciation on the part of machinery before selling, we have already calculated this amount in the previous method. And we know that the accumulated depreciation of the machinery which is being sold is transferred to the machinery account. But here, as we have to prepare machinery disposal account, so we will transfer that accumulated depreciation amount to the machinery disposal account. So we will write it here to machinery disposal account. We are transferring the accumulated depreciation on the part of machinery which is being sold, and the amount was calculated in the previous method, which was 27,500. This is the amount of depreciation charge on the part of machinery for the time period of 2 years, 9 months. Date will be 2013 1st January. So as we can see here, credit side is having a greater amount of rupees 2,40,500. We will record the same amount here, 2,40,500. Now as we can see here, this is the balancing figure remaining, and we write the balancing figure as to balance carried down. Amount of balancing figure will be 2,30,000, and date will be at the end of the year, which is 31st March. So after preparing provision for depreciation account, we will now prepare machinery account. Now here, the machinery was purchased on 1st April 2010. Here is 2010, date is 1st April. We will write the purchase of machinery as to bank account. Purchase price is 8 lakh rupees. Now as we know, in this account we will not record the amount of depreciation because we have already recorded the amount of depreciation in provision for depreciation account. Here we will be recording only the purchase and sale price of machinery. So machinery which have been purchased for 8 lakh, we are having the amount of 8 lakh on debit side. The balance this amount will record the same amount on credit side. Balancing figure is written as by balance carried down, and it will be recorded at the end of the year. End of the year is 2011 31st March. Now this amount of closing balance becomes the opening balance in the next year. Beginning of the next year will be 2011 1st April, and we record the closing balance as opening balance to balance brought down. Amount is 8 lakh rupees. Now again, we can see debit side is having a greater value. We will record the same amount on credit side also, which is 8 lakh. And it will be recorded at the end of the year. End of the year is 31st March 2012. Balancing figure is written as by balance carried down. Now again this closing balance becomes the opening balance in the next year. So we will record this amount on opening balance as to balance brought down, 8 lakh rupees. Date will be 2012, 1st April. Now in the year 2013 on 1st January, which comes in between the accounting year of 1st April 2012 to 31st March 2013, a new machinery was purchased for rupees 1,20,000. So in the year 2013 on 1st January, we will write the amount of new machinery as to bank account. Amount is 1,20,000. And also in the same year, which is 2013, 1st January, the part of first machinery of 1 lakh rupees was sold off. So as we know, here we will transfer the book value of that part of machinery to the machinery disposal account, and the entry for transferring the book value of machinery to the machinery disposal account is machinery disposal account debit to machinery account. So we will write here by machinery disposal account. Amount is 1 lakh. 1 lakh is the book value of machinery which is to be sold. Now here we can see debit side is having a greater value with the amount 9,20,000. We will record the same amount on credit side also, 9,20,000. This is the balancing figure here. Balancing figure is recorded at the end of the year, which is 31st March. By balance carried down, amount will be 8,20,000. So now at last we will prepare a machinery disposal account where we will record all the transactions related to the purchase of machinery, sale of machinery and accumulated depreciation charged on machinery which is being sold. So we know that the part of machinery which is of 1 lakh is being sold. It is sold in the year 2013, 1st January. Now first we will record the amount of depreciation charge on the part of machinery which is being sold, and that amount of depreciation should be accumulated depreciation. Accumulated depreciation means total depreciation charged on the part of machinery for the time period of 2 years, 9 months which we have already calculated. So we will write here by provision for depreciation account. Provision for depreciation account is also known as accumulated depreciation, and the amount was 27,500. Next, on the same date, the machinery was sold. We will write the sale of machinery as by bank account. It was sold for the amount 44,000. And the value of machinery was rupees 1 lakh. So we will write it here to bank account 1 lakh. It is considered as the purchase price of the machinery. Here is 2013, date will be 1st January. So as we can see here, debit side is having a greater value with the amount 1 lakh. We will record the same amount on credit side also. 1 lakh. Now this is the balancing figure here. Balancing figure is considered as statement of P&L account. Statement of P&L account is appearing on credit side, which means the company has beared loss on sale of machinery. And the balancing amount is 28,500. So this is how question based on asset disposal account under second method is solved. With this we have completed this chapter of depreciation. In the next session we will be starting the new chapter. That's all for today. Thank you.